Hey guys, Crypto Sunday, and it's a strong down week. Well, I suppose not that strong. We've had much worse down weeks before, but yeah, some of the altcoins got absolutely walloped. Overall, down about 10.4%. So yeah, Bitcoin being sort of less of those, but we'll come back to um, some of these drops. Looking at the coin shares report, this was sort of relative, well, quite sizably positive. Looking at the last few months, 2.17 billion. This is going to be negative in tomorrow's report, unfortunately. It's not been the best week, which we'll come to in a sec, but the week before at least, we saw 1.5 billion come into Bitcoin and 496 million into Ethereum. Still money coming out of the multi-asset. That does seem a rather strange one. It's actually negative for the whole of 2025. You also had 60, 70 million of inflow for XRP and 45 for Solana, and a little bit into, well, reasonable amount into Sui, a little bit in Litecoin, and then some Chainlink, a little bit of shorting Bitcoin. 14 million into other coins as well, outside of Chainlink and all the others. Not too sure what these would be. We've had some newer ETFs, I think, sort of rest of world, a little bit keener to have smaller token ETFs than US, but US is starting to get them. And by country, no sort of huge surprises. They do have this expanded list of countries now, but no one sort of popping off as really noticeable. It's Germany with 64 million and Switzerland at 41.6. I expect this is sort of the XRP and Solana ones to a certain extent. You do have US Solana ones, of course. Looking at the more recent weekly news, we have Solana, only 4-day week this week, of course, because it was a US bank holiday. But they saw 1 day of outflows just from 21 shares. But overall, a positive day, and it was 4 positive days in a row, although, small single figures. So we're not seeing any of the sort of double figure days, from Bitwise and people like that. It's just very quiet on the Solana side. Ethereum and Bitcoin sort of fared quite a bit worse. Ethereum with 4 outflow days, not huge days, but sort of 230 and 287 were quite big. And then 42 and 41 just sort of not exactly rebounding, not helping at all. Barely any inflow on any of them. So yeah, not helped. Obviously not helped by continued selling from Grayscale. You'd sort of assume that isn't going anywhere else. That's just being sold. Could be going into other ETFs. We don't know, but yeah, that's just continued headwind. And Bitcoin similarly as bad, considering the scale of the Bitcoin ETFs. Obviously, bigger numbers. 479 million outflow on Monday, 708 on, or Tuesday rather, 708 on Wednesday, with 356 out of BlackRock, and then again 2 smaller outflow days on Thursday and Friday, still with outflow days from BlackRock. So yeah, everyone's just taking a little bit of profit. I suppose when I did sort of say, as the money was piling in here, this wasn't all long-term investors. You had sort of basis trade people and hedge funds and all sorts. There could have been sort of various reasons they were buying these, that aren't for just long speculation on the price of Bitcoin. And so when they have outflow days as well, this isn't necessarily people super bearish on Bitcoin. It could just be, I understand the sort of basis trade arbitrage, used to be at sort of 15% annual returns, which, is very, very attractive to hedge funds and people like that, considering it's sort of risk neutral. Doesn't matter whether Bitcoin goes up or down, they still make 15% a year. That has sort of shrunk down an awful lot with Bitcoin volatility coming down, and is sort of in the mid-single figures now, so they may have very little interest in it now. So you could see some of these outflows from that sort of thing. Looking at the treasury companies, got an enormous buy from Strategy following, I think, two 10,000 over 10,000 Bitcoin weeks in a row. They bought 22,305 in the week before last, announced on Monday, of course, at an average of 95,284. So that is, a somewhat poorly timed buy, considering we're now at 88, but we always say expect the they're selling common stock, I suppose, so it's not necessarily a convertible deal that the buyers say you must buy it immediately. They could have choice to sort of hold the cash for a little bit, but that's not really their style. So yeah, they now have 709,715 Bitcoin at an average of 75,979. So it's creeping up. You had some other very, very small buys from some of the other treasury companies. The little Smarter Web company, the UK one, bought 10 Bitcoin. Not exactly pushing their total all that much. You had DDC Enterprises bought 200, so they have 1,583, so that is quite a big buy for them, but not a huge buy sort of on the total. And obviously, Strategy earnings coming up, that isn't going to be particularly pretty. Shouldn't affect the stock, you wouldn't think, since we know basically how those earnings are going to go. It's end of September to end of December Bitcoin price, and not a huge amount else. The software company underneath that doesn't really matter anymore. It's going to be billions. I think, was it 10 billion loss on the Bitcoin, and that's about it really. Looks like we're getting more and more options. We have the SEC allowing an increase on the amount of options that can be traded on the Bitcoin ETFs, sort of between the SEC and NASDAQ. I think did sort of report this before, that they were some of the providers were seeking to increase the contract limit from 25,000, I think, to 250,000. Contracts per entity, and it looks like they've just removed it entirely. So whether the demand is there for options on the ETFs, this is basically all the big Bitcoin ETFs: Fidelity, Grayscale, BlackRock, Bitwise, ARK, and VanEck, and everyone. There's sort of various strategies that people would, in theory, want to put in that would use options. Some people want sort of some of the upside with only some of the downside, and you'd sort of do that through having options. Some people want to get yield on it, and all sorts of stuff that aren't just buying and holding long. That sort of, they said, wasn't really feasible with a 25,000 contract limit. So that being not only increased to 250,000, but just removed completely, and being effective immediately. They requested a waiver of that it normally takes 30 days, and they agreed to that as well. Very friendly SEC, it seems, at the moment. They will basically keep an eye on it for 60 days, and if anything sort of blows up or starts looking a bit squiffy, then they may suspend products. But yeah, this you would think could be good news. Everyone seems to love their options. Options sort of are growing every year. We're getting more 0 day to expiry stuff, more speculative stuff, and if we're now getting it on the Bitcoin ETFs, have to see how much this does. If we see any sort of stats on it over the next 6 months, see if they're getting used more and more. There's a bit of speculation as well. GameStop have $420 million worth of Bitcoin, and they have moved all of it, it seems, to Coinbase Prime. The sort of assumption from the market being that they want to sell all of it. They have 4,710 Bitcoin. I don't necessarily think this means they're selling it all, but yeah, we would lock in a estimated loss of $84 million. They, as far as I'm aware, still have sort of $7 or $8 billion on the balance sheet. They sort of borrowed some more debt, and yeah, now have an awful lot of cash. They basically indicated that they were going to use some of their cash to buy Bitcoin, and they then didn't. They sort of borrowed some money in convertible bonds and spent like $500 million on Bitcoin and still have all of the cash, which I think angered shareholders a little bit. And yeah, if they were now sort of potentially selling, I'm sure that wouldn't go down well, particularly either way. Why they want to just sit there with cash not doing anything on what was sort of a very popular meme stock is a little bit odd, but I would think this is just speculation, and maybe they're just custodying with Coinbase Prime. We'll have to see in their filings. Probably the biggest news this week, though, or as far as sort of my purposes go, being heavily involved in the miners, is mining hash rate. So I'll just sort of quickly jump to the hash rate chart that I usually use. This does seem to disagree with some other charts, sort of maybe because it's just a very, very recent thing, and others sort of update a little bit, take a little bit of time to update their numbers. But certainly on the Coin Wars chart, we've seen a rather dramatic decline in the hash rate, sort of going back 6 months. This is all the way down to 680 exahash. Wasn't here, and even in August we're looking at 728, and yeah, you have to go back to 24th of June to get to 661. So yeah, not quite sure why all of this is going down. We've sort of seen some articles of crackdowns on illegal mining, basically, sort of people that have found ways of using sort of either free electricity or illegal electricity, I guess, to run Bitcoin miners and sell. And if you don't have to pay for electricity, then Bitcoin mining can be extremely profitable. Russian lawmakers are now proposing fines of up to 10 million rubles for illegal crypto mining. So maybe that is sort of having a bit of a crackdown. You've also had sort of some fair amount of disruption in Iran. They were sort of a little bit of the hash rate, and you've seen internet disruptions, sort of large parts of the grid being just ghosted. Nobody knows what happens to it. And yeah, some of their hash rate expected to have been turning off. But if you look at this sort of an estimated Bitcoin mining hash rate by country, you sort of see it is quite distributed still. Canada, have 6.5%. US, obviously, with the enormous push from CleanSpark and herein and all the sort of public miners, Marathon, have got to 37% now. China, who used to sort of be an enormous part, some people are still reporting that they are. I think that's more mining pools maybe rather than hash rate. But they're reported here as 21%. Kazakhstan 13%, and sort of Russia 4.6. So if you clamp down on all of that, that wouldn't be less than 5% dropped. And then you've got sort of smaller countries down here. Iran, 0.12%. I expect they're at more than that. This may be sort of incorrect data if they're not counting some of the sort of illegal mining. But yeah, it's a little bit odd, to say the least. This obviously, unless the network is completely collapsing, this would be good news for the public miners, because looking at the difficulty, we did have a reasonable drop from 146 to 141, sort of going back a few months now. It peaked in November at 150, just under 156, and has been sort of continuously coming down every 2 weeks. There was a ever so slightly small increase there, and then it sort of came down again, and it's come down again, and now with this huge drop, obviously this could change going forward, but yeah, it's now, block time's now sitting at 11.93 minutes. With less hash rate, they're not going through. So at the moment, we're still looking at, almost 2 weeks away, Sunday, February the 8th for the next adjustment. This was the saying Thursday, sort of just a day or so ago, but because block times are slowing down, the estimated date for the next adjustment is, moving back as well. And at the moment, it's showing 16.2% drop for difficulty, which I would love if that went through, because it would mean my miners get more Bitcoin. Certainly this month, I would think, should be quite an increase on last month. So yeah, it's potentially good news if some sort of illegal hash rate is being taken offline, and maybe sort of it's being reported as some of the public miners switching their hash rate to HPC AI stuff. I'm not sure whether that is too much of it, really. I think we're never really going to find out 100%. Just looking at the global liquidity chart as well, I still find this sort of really interesting to observe. Going back to my sort of 12-week delayed global M2 chart on since the ETF started, you sort of show the correlation sort of relatively close, albeit for a year and a half basically, and then it sort of broke down in July, and a lot of people, I think, don't really appreciate how much how much of a knock the space took in October. I think it was October the 10th when you had the huge sort of leverage blowout. You can see the one great big red candle there. I do think the sort of leverage people are obviously very annoyed that Bitcoin isn't going up, maybe not realizing that they are in some part of the problem. Obviously, leverage sort of gets wiped out. Those people have lost all of their money where they could have just been buying and holding Bitcoin, and that money sort of causes, or that leverage causes issues with the exchanges and market makers and people, and maybe some of those sort of pull out or have problems to work through. And yeah, it does seem that we're potentially still working off some of that issues basically. It was sort of rumors that the exchanges had to step in and basically buy the Bitcoin that people were losing because the market makers sort of blew up or their APIs weren't working, and so the exchanges are now potentially selling that off. So you've had there's sort of talks that you've been having a continued sort of methodical, almost mechanical selling every day of sort of similar amounts. So that would sort of seem like someone is unwinding a position that they never really wanted, and sort of to think all of that has been caused by people wanting more than just buying and holding Bitcoin, wanting more of a gain. I think people sort of shoot themselves in the foot and then blame other people basically. But yeah, getting back to it, we sort of have the crocodile jaws opening up, as they call them, in July. And interestingly, with the dollar sort of falling again, sort of tariff news and bits and pieces, we've had another little uptick in global M2. Sort of had a reasonable uptick in sort of the last couple of months, and it's now sort of ticked up again, sort of giving a implied price on this scale at least of sort of $260,000, massive, great big target. And if we were still on the sort of 12-week delay and this was sort of all holding up, then it would be around mid-April time. So there's almost no chance that we're going to get to those sort of levels in that time frame, but still interesting to look at. Looking at the more sort of zoomed out one, this is the different global liquidity indicator that you can sort of flick onto different denominations. This is sort of more Western focused money, Eastern focused, or just global liquidity in trillions. That's basically sort of similar to the M2 chart on the blue one, but it does seem to be sort of China, Japan, are there more sort of money printing nations at the moment? And the sort of talks of that basically not going into Bitcoin, and that's the reason that you have sort of global, maybe Eastern denominated, Eastern focused M2 increasing and Bitcoin price not going up because it's going into sort of their own government bonds, it's going into gold, and it sort of doesn't really find its way into Bitcoin. But in the past, at least, it has been sort of somewhat correlated. This is on a 13-year time scale, so it's not going to correlate one to one, but you can see the sort of the general up moves and down moves. It's not that far away, and I wouldn't call this sort of just coincidence. Basically, it's still the global amount of money in the world, and sort of Bitcoin being a somewhat speculative asset tied to the money in the world, and just sort of getting the recent price again. That's the little spike up that we've had in the past week, and sort of the larger one here was the larger move we saw on the blue one. And yeah, you've still comes up with a different price, a sort of implied price of 310,000, but we've seen the price can stay below the line or above the line for quite some periods of time, so it doesn't mean all that much, but you would think sort of spending a full year well below this line would be a little bit strange. We haven't sort of had that much time sort of particularly below the line. You could sort of bring the price down, to sort of have these 2017 peaks and the 2013 peak sort of a little bit closer to the line. But if you do that, then the sort of correlation for the whole of the COVID period really breaks down then. So I would sort of see the 2017 peak as being a fairly short period of euphoria that sort of then came down quite quickly, and you had the 2018 sort of bear market in somewhat in stocks and in global liquidity as well. So it sort of came crashing back to life, and I would see this sort of as a better fit for the line, and you sort of then had a 5-year period of being relatively closely correlated. So yeah, to potentially close this gap in the next year or two, I wouldn't see as that unlikely. It's very unlikely that the global liquidity line is going to come down. So to close the gap, Bitcoin price would have to increase. And just looking at the portfolio, of course, obviously a lot of these coins are down. Bitcoin is the only one in single figures, 6.8% down. Solana 11.2, Ethereum 11.5, Chainlink 12.4, all sort of very, very similar. Helium 11.7, and then some of the Solana ecosystem coins getting properly hammered, 13.94 on Jito, nearly 25% off Metaplex, and then a little sort of same basically off Radium and Honey as sort of the bigger coins. And yeah, most of these are almost 90% down. Honey at 91% down now. So there's sort of a couple of thousand per coin gone. And I keep sort of saying whether it's worth taking a tax loss on these and putting, what small amount of money there is there into sort of options or something that I have a little bit more conviction in, because I really can't see a sort of huge alt season. Even if Bitcoin sort of does start going up, there's very little guarantee that all of these, raft of dozens and hundreds of altcoins sort of go with it. So yeah, I sort of do have more conviction in Bitcoin and Bitcoin related things like the miners. And options on the miners while they are time limited, and you can lose all your money. Obviously, you can lose all your money pretty much in altcoins as well. I would see the options as a better risk reward potentially. So yeah, still sort of probably not going to end up making a decision on that, but as it's only sort of £1,000 between sort of 1,200 quid between 4 of these altcoins, and helium doing ever so slightly better, or 2,000 between the whole lot of them now. So yeah, 2,000 into options isn't going to make a sort of massive dent really. But yeah, let me know your thoughts in the comments below, and like and subscribe. See you soon.